So starting with where we are still well below what I would call our pre-pandemic path. So if in the year FY20 we were at 100, in FY23 we should have been at 121, right? So 6.5% growth compounded over 3 years is 121. Consensus currently is at about 109 going down to 108, right? So people are cutting their growth forecasts. So we are about 10% below the pre-pandemic path. So there is a lot of slack in the economy. And this is important as we discuss the prospects for inflation. The US, on the other hand, is at or above its pre-pandemic path. So which is why they are an overheating economy, that they're running out of workers, of course exacerbated by several other factors, but that's not where India is, that's not where China is, that's not where the rest of Asia is. And that's something to keep in mind as we think about the inflation and monetary factors going forward. I remember writing about, now digital payments are 5% of total payments. Now we are at 35% of total payments. You look at FASTag, which is the collections on the right-hand side chart. This is something that is partly share gain. This is not, of course, this is not how road traffic has increased. But what this tells you is not just about the less of a time spent on at toll nakas, but it's also about transparency. If you want someone to fund your road, and it's a Canadian pension fund, for example, how do they become comfortable that there is not money laundering happening at the toll naka? And this is what gives you transparency. This allows you, and I don't know if you've seen the Delhi airport, they're already trying FASTag for parking payments. You can put one at Haji Ali here, and you can have congestion planning. Right? So these are remarkable things that are happening, and the impact of these in the future is going to be even bigger. You see private funding. I think we just heard about the 100 unicorns and or more than 100 unicorns. Well, if I did current benchmarking, maybe they will quite a bit fewer. But the way I see it is that this is a very, very important part of our future. See, in India, we've always had phenomenal entrepreneurs, right? So people who have the entrepreneurial instinct. We have had communities who, the Marwadis, Gujaratis are the most famous ones, but they do not want to work for anyone else. They want to create businesses. They drive, they dream of and want to aspire for wealth creation. The problem has been access to capital. That when I graduated out of college many years back, the only option I had for capital was to go bribe a branch manager and get some loan. There was no equity capital available. And of course, even debt was very hard to get. Today, as an entrepreneur, if you want $25,000, $30,000, $50,000, there are angel investing networks which have been created in every large city. Some of them will weaken, atrophy over the next year or so, right? Because we're going through a funding winter. But remember that this form of capital did not exist formally anywhere in the world outside the west coast of US till 25 years back. So venture capital, and there's a long and interesting history of how venture capital started in the 1960s in West Coast US. This is a very new form of capital, and for India, this is a very important form of capital. So this is something that we need to keep in mind, because letting entrepreneurs grow fast when they are small is extremely important. The bigger point is that global capability centers are extremely important for services job creation in India. And if the world needs more software engineers, so we created about 5 million engineers over 40 years, right? I think we'll create another 5 million, or we'll have another 5 million software engineers in the next 8 to 10 years. If the world needs a lot of software, there's nowhere you will find them. Right? People used to go to Eastern Europe, Ukraine, Slovenia, Poland, but given what's happening out there, I think it's important to limit. And of course, demographically, those places are very different, right? Average age is 41, 42, and there are serious issues. 50% of India's energy is imported. So obviously, if the global energy markets become choppy, we have a problem. We are paying for this through imported capital. So if the global markets become turbulent, we have a problem. So we have suddenly gone to a big deficit. What has happened is our reserves are tanking. I think the rupee needs to weaken more, right? So compared to what has happened, see, this is the real effective exchange rate of the rupee. So this is not just about dollar, right? So there's been many memes that have come out of that comment that the rupee is not weakening, the dollar is strengthening, but actually there's a lot of truth in that. You see this is India's real effective exchange rate. We are appreciating against every other currency. We have appreciated against the Chinese yuan. I think the best way to close a balance of payment deficit, so if you see these options, you can't get higher capital inflows in this environment, you can't get higher exports, you need to bring down imports. How do you bring down imports? You reduce imports by weakening the INR. I think what may happen, what is likely to happen, is that the RBI uses a mix of higher rates and weaker currency. And so they finally let the 80, that line in the sand, breach. We've gone to 82. If the BOP doesn't adjust, I think in 2 months' time we should be thinking 84. If that doesn't happen, 3 months' time we should be seeing 86. So it's a gradual process. I'm hoping that by the time we're done with that, the market stabilize and we don't need to let the rupee depreciate against the dollar anymore. But the rupee is unnaturally strong right now, and I don't think that's very healthy.